story of the second quarter and probably the third quarter being the two T's. There's going to be a lot of alliteration today between the two T's and the big, beautiful bill. We'd like to welcome everybody to the 24th edition of Barnes Quarterly. It's hard to believe we've been on air for 6 years now, but it's really gone by fast, and we've had a lot of fun along the way. But we thank you for allowing us to make this journey. At any rate, we have a very special guest today that'll be on later, a gentleman by the name of Brisman White, who's a fly fishing guide in southwest Montana. I've had the enjoyment of being out there to do a little fishing and then headed north up to the Kalispell whitefish area to visit some great friends and check out Glacier. At any rate, I'm not the only one that's been traveling. I decided to stay in country. However, my friend Eddie Hatch here took a little longer journey. Eddie, tell us a little bit about that.
Yeah. I was, able to luck into a trip that, as far as the cost goes, I was at an event that no one was interested in buying this trip, and so I ended up buying a trip to South Africa for $300. So we decided to take a little time and go over there, and we spent a little over a week in South Africa, did a little hunting and a little safari. Checking all the animals and checking out the country, and it was better than we actually hoped for. It was a great trip, and we're trying to figure out how we can get back.
Well,
not anytime soon.
You got plenty of time to think about
not
that.
Not anytime soon.
Well, with that, we're going to move on to our next segment. We have a special guest here on Barnes Quarterly. His name is Brisman White. He is affiliated with Rack and Reel Outfitters out in Twin Bridges, Montana. That's the southwest part of the state. And I had the pleasure of spending a couple days with Brisman catching some great fish on a couple of different rivers. But Brisman, just to kind of start from square one, how did you're not only a fly fishing guide, but you guide for elk and other game, and how did you get into what you're doing now?
So it started from a really young age. My parents were guides. They were guides in Alaska. So I was kind of born into this game. I started guiding when I was 17. Before I could legally get a guide's license, I was an outfitter's assistant, and have been doing it ever since. So just kind of the way of life for me. I went to school and did all that and just ended up loving guiding and kept guiding through it all.
Didn't you kind of grow up in the northern part of the state in Whitefish or Kalispell?
Yeah, I grew up in the Flathead Valley, so northwest Montana. That's where I first started guiding. I started guiding in the Bob Marshall Wilderness area, running pack-in trips and float out. So we'd pack in on horses and then float out, and they were 6 days in duration. But yeah, I grew up northwest part of the state for the winters as a small child, and then spent the summers in Alaska. So kind of been all over the place.
It sounds like a pretty good life.
It's one that I love. Absolutely.
Well, I know having fished with you is clearly something that you love, and tell us a little bit about sort of a guest experience with Rack and Reel if they chose to come out, pay you a visit, and do a little fishing.
Absolutely. So, Rack and Reel, what's really cool about Rack and Reel is we can accommodate all sorts of different adventures, right? Obviously, our flagship two activities are hunting and fishing. Hunting in the fall, fishing all summer. We're kind of positioned right here, right in the middle of the best fishing in southwest Montana. I would argue in Montana and maybe in the country. We have a really cool ecosystem with all sorts of different rivers. You can access them all easily. So that, as you saw, Stan, you fished 3 different rivers in 3 days. So it's really easy for us to move around. So our basic program, usually people come out for at least 2 days of fishing to 3 days of fishing on the fishing side, come out, stay at our lodge, We have really high quality, gourmet food. We, provide everything, right? You can land at the airport. We pick you up from the airport, drive you out to the lodge. Fishing's all taken care of. Food's all taken care of. You just come out and enjoy being away from it all for a couple of days and seeing what Montana is really about, right? We're based on a big cattle operation. So there's a lot of land to explore and a lot of places to see. And I think it's about as authentic Montana as you can possibly get.
That was probably my fourth or fifth visit out there to Rack and Reel and to Twin Bridges. And, I can tell you, I had a fantastic time. And typically, just for those who maybe aren't familiar with fly fishing, you typically have a choice of either wading in or floating, and floating in a drift boat that is steered by the guide. And I actually prefer the drift boats just because you can see a lot more water, have a lot more opportunities, and even if you're not catching fish, you're having a beautiful day and seeing some beautiful scenery. So it's all good no matter what the result is. But we had the good opportunity to fish the Beaverhead, the Big Hole, and the Upper Ruby. And are there other rivers or waterways that you work as well?
Absolutely. So we fish the Jefferson as well, which is, the convergence of those three rivers that you fished. It's kind of the bottom of the ecosystem. We fish that a good deal. We fish a number of the smaller creeks around here, and also go over to the Madison. So, our ecosystem is huge. It has, within an hour drive, you can reach somewhere in the range of 45 different floats. So you could spend a lifetime out here and keep finding new water.
Yeah, and one thing that for some of the listeners that maybe they've never fly fished before, and maybe they're reluctant to reach out and take a float trip with you, what would you tell those folks in terms of, what level of fishermen or how experienced they need to be to book a trip with you?
So, we see the full gamut from people who've been here, been out to Montana once a year or 5 times a year their entire lives, to people that have never done it before. And each one is a special trip in its own right. And personally, I love those people that have never seen it before. They're really appreciative. I spend a lot of time working and honing my skills as far as coaching and getting people into fish. But at the end of the day, just as you were saying, floating down the river in a drift boat, you get a scenic float and a riverside lunch, even outside the fishing. So there's something for everyone. And if you've never fished before, that's nothing out of the ordinary. If you've never fly fished before, right? We see it all, and we honestly love it all. I love showing people my home here in Southwest Montana, and taking them out on the river and doing the thing that I love and feel passionate about. So there's no level of skill you need to come out here whatsoever.
And so I think as we talk, your lodge can accommodate probably 6 or 8 rods. Is that accurate?
Yeah, absolutely. So the lodge itself is, right around that. 6 is super comfortable. There's one person in each room. You get in each individual room. 8, we can pair up a couple rooms that have 2 beds in them. We also have a guest house there at the lodge. So you're just a short, 100-yard walk from the lodge, and that can accommodate up to another 4. So reality is we can do up to 12. But that 6-person group is really comfortable, and a really nice stay with everybody having individual rooms and staying there at the lodge.
I can certainly vouch for Brisman's skill as a guide, not only in catching fish, but also in removing embedded hooks in guests' knees, which I had the experience of while fishing. I won't say that it was painless, but it was quick and easy, and for the most part painless. But Brisman's very patient, and I'm sure that his staff shares that same commitment to quality guiding. But if somebody wanted to learn more about Rack and Reel and how to book a trip, what's the best route to do that?
You can go online at Rack and Reel Montana. Check out all our offerings on our website. You can reach out to us, via social media, which are both Rack and Reel Montana. And then, as well, the phone numbers are on the website, or you can call me directly. My phone number is on the website. So just, give us a call, shoot us an email, and we can figure out something that works for everybody. We really have a great amount of flexibility as far as different trip offerings, and, really experiencing Southwest Montana for what it is.
Well, hey, we really appreciate your time. We thank the Bradleys and the Keltzes for opening up their homes to us to come out and experience Montana. And hope you have a great rest of the season, and we'll be in touch.
Thank you, Stan. Thank you, everybody. I appreciate the opportunity to jump on here and kind of explain what my life consists of out here. Hope you guys are not frying alive in that humidity down there. I know I wouldn't be doing good. So good luck to you, and hope to see you out here.
Well, I can tell you it's hotter than the humidity's higher than the 20 to 30% that you were complaining about.
Anyway. Yeah, I'm sure. It's only 70 degrees today. 70 is a high out here. It's an absolutely beautiful day in Montana today.
Yeah, thanks for rubbing it in. So we're here with Chris Zaccarelli, our Chief Investment Officer, who should not be a stranger to anybody that's a loyal listener. Chris is up in Davidson, North Carolina. And Chris, how are things up there? Lots going on in the markets for sure.
Yeah, it's been a busy year. It's been one of those years where you blink and point to point, maybe not a lot has happened, but in between, it's been quite a ride for sure.
I know that LPL has referred to, the story of the second quarter and probably the third quarter being the two T's. There's going to be a lot of alliteration today between the two T's and the big, beautiful bill. But the two T's are technology and tariffs. Why don't you talk to us a little bit about what's going on in both those areas?
Yeah, that's a great place to start. Clearly this year has been all about trade and tariff policy. Even at the end of 2024, we had a good feeling that, if we had tax cuts, deregulation, a lot of, cyclical proactive type of measures that could help the markets. One of the things that we were worried about, and one of the big risks for the markets, was going to be what would be tariff and trade policy be like. And sure enough, in the second quarter, we really saw that in a big way, with April being down something like 18%, and then we clawed our way all the way back. So as I mentioned before, if you would come in on January 1st and then looked again on May 31st, within 5 months, you'd barely move. The S&P was up less than 1% point to point, but it made a lot of moves in the middle. In addition to that, technology, taking that second topic, artificial intelligence is again back in the news, chips, semiconductors, a lot of what we've been talking about over the last 6 to 12 months in terms of interest, not only in the underlying technology, the chip makers, the types of things that are the building blocks for artificial intelligence, but a lot of the large companies, the so-called Magnificent Seven, those large technology companies, are making really big investments into artificial intelligence. So really the story of 2025 so far has been a lot about tariff and trade policy, but it's also been about technology and artificial intelligence. And judging on just the first couple of weeks of July, as we're recording this podcast, you're seeing that again come into focus with the July 9th tariff deadlines coming and going. And then big news that the administration is going to be loosening some of the restrictions that they had on artificial intelligence technology. And so we're starting to see a renewed rally in that area as well.
Well, it seems like this week in particular, President Trump is coming out or he's announcing the percentage tariffs that will be enforced on each country. Were any of those a surprise to you?
Some of them were a surprise. We were expecting that, the European Union would come in a little bit lower. The baseline's been around 10%. They put the European Union at 30%. Now that again could be a negotiating tactic, and we could see those levels come back down. But if you look at the largest trading partners of the United States, it's of course Canada and Mexico, our two neighbors. China is a pretty large portion of our trade, but really the EU and the developed economies in Europe are another big part of the puzzle. So even though the United States is a 70% consumer economy, and so a large part of our economy doesn't have to do with trade, so much of the things that we can't make domestically or that are inordinately expensive for us to make domestically, of course, we get through trade. So a lot of what the United States does in terms of our dominance around the world in services depends on a lot of the materials and some of the lower level manufacturing capability of the rest of the world. So it has been a little bit of a surprise that the administration continues to put pretty high levels on those countries which we would consider to be allies, at least from a geopolitical point of view.
Well, I guess where I'm coming out here is, how should an investor what should their view of the current market be? Because it seems like there are a lot of conflicting themes out there. I mean, you've got the headwinds of tariff, you've got inflation came out today a little bit higher than expected. Earnings are moderating, but they're solid among the stocks out there. But yet the market's hitting new highs. I mean, how do you reconcile all that?
So it's definitely been
in 5 words or less.
Well, I think, stay the course and be patient would be the short answer. If you wanted me to expand on that, I would probably talk a little bit about how, the market is really digesting a lot of different information. And the idea that a lot of the tariffs and trade policy are short-term noise, but will eventually be worked out, is one of the reasons that the market has started to move past it. The other reason, I think, is that with tax cuts and deregulation, there's a lot of momentum and a lot of opportunity for companies to get even more profitable than they have been in the past. So they're going to try to use that ability to get more productive, to be more efficient, and to be more profitable to help them navigate the landscape of how the tariffs come down. I agree. There's a lot of moving pieces. It's hard to believe that with so much uncertainty that we've seen this year that the market has managed to climb back to all-time highs. But there's an old expression on Wall Street that the market climbs a wall of worry. And the idea is that as long as there are things to worry about, there's people who still are being left out of the rally, and eventually they'll come back and buy into it, and vice versa. When it seems like there's nothing left to worry about and there's every reason that you should be fully invested in the market, that's typically when none of the unforeseen risks and dangers are being taken into consideration. So investing in the market is often a contrarian activity where the best time to invest is when it seems like it's the worst, and vice versa.
Chris, you'd mentioned the Magnificent Seven. It seems like, second quarter early, everything kind of sold off, that those particular stocks took a big hit. And then coupled with the news on AI and the different technology, issues that we've discussed, those have all kind of come roaring back, and we've seemed to have a much more of a concentration in the market again. Do you see that broadening out over the back half of the year, or you see that staying pretty consistent?
So I think it really depends on how the economy unfolds. One of the reasons that the stock market has held up so well is that we haven't gone into a recession. I think a lot of what the market was pricing in that first week of April is concerns that was concerns that if we had very broad tariffs at very high levels, it would be very difficult for the economy to stay out of recession. And so the stock market started pricing in a recession. Once the administration backtracked on not only the breadth of those tariffs, but the magnitude, the market rallied back somewhat from what had originally happened, and as we've seen, has continued to heal. So as long as the economy can stay out of a recession, people stay employed, continue to keep spending, companies will have to navigate a more difficult environment. And it is possible that growth will slow. And typically what you'll see is in a slowing economy, those companies which have a lot of growth, like those large technology companies, they'll continue to get a premium versus the rest of the market. But if we can see the economy come to terms with the tariffs, navigate this landscape, and then get those tailwinds of deregulation and tax cuts, you actually could see a broadening out. So I think really the answer to your question depends a lot more on what's the path of the economy than necessarily where investor sentiment lies. But clearly there's a lot of excitement around technology. And so I think as long as we can stay out of a recession, you should see a lot more broadening of the market. We could see mid caps and small caps, those mid-size and smaller size companies can start to participate in the rally. And you can also see some of those other sectors besides technology, potentially industrials, energy, materials, some of those other non-technology sectors start to do better. So that's one of the things I would look for if we can stay out of a recession, which so far it looks like we will.
Chris, I've noticed just looking at some of the accounts that we've been managing that some of them have started taking a little bit heavier weighting to the fixed income side and looking at, I guess, potential interest rate declines, but also just questioning what your thoughts are as far as areas that you're looking into for future investment.
So looking at the second half of the year, we're really looking at, what are the opportunities now, given that a lot of the concern in the first half of the year was around the uncertainty around trade policy, around tariffs. I think we took a little bit more of a defensive take, even in early February, just trying to see how would things work out. And as it turns out, the administration did turn back and reverse course from the most drastic of early measures. And so I would say, given that we had those initial announcements in April, which were very surprising, a very quick pause that was put on place that extended through July 9th. Now that we've made it through July 9th, I don't know that we're necessarily out of the woods yet. I'm not going to say that we, never say never on a recession, but things are looking better from an economic point of view in terms of more certainty around trade policy. As Stan mentioned, not every country has gotten their tariff rate, but the administration is starting to release that information. Negotiations have been ongoing. And I would argue that heading into the second half of the year, regardless of what the unexpected might bring, which of course we can't forecast, a lot of the known unknowns, the uncertainty around tariffs, have been resolved. So what we'll be looking to do in the second half, and what we've already started to do, is start to get a little bit less defensive in terms of the tariff uncertainty and start to look for some of those opportunities where we might see a broadening of the rally. So as I mentioned, some of the areas that may do better would be, smaller companies, mid-sized companies not just within the Magnificent Seven, which should continue to do well, but companies outside of that area, whether that's in the industrial sector, energy or material sector, all the things that would happen if you expect the economy to continue to expand and not contract and head into a recession. So those are some of the things that we're looking at right now.
Inflation data was a little bit warmer than expected today. I know Powell came out and said that he either needed to see rising inflation or a struggling job market before they start making any moves. Do you think this is something that will show up on their radar and start looking more intently about making those moves? Or do you think that was just something that was a result of the tariffs that aren't really as big of an effect?
So I think the Federal Reserve absolutely is going to be paying very close attention to the inflation data. To your point, it did tick up a little bit month over month. The increase wasn't that large, although, we're clearly headed back in the wrong direction, at least in the short run. And so for that reason, I don't think the Federal Reserve has any reason to reduce interest rates. There was a lot of talk earlier this year about the Fed starting to cut interest rates as early as July. And I think there's very little chance of that happening at the end of this month. So after we get through this month, there's really only 3 meetings left. And there still is a belief that the Fed would like to cut interest rates, just like they did last year. Even though we didn't see unemployment spike and we didn't see a recession begin, the Fed would like to reduce the current level of interest rates a little bit if they could, in advance of any spike in employment and potentially to try to keep the economy going and not head into recession. However, the most important thing that they have to watch before they can make those interest rate cuts is going to be the inflation data. So the data that we saw today, I don't think rises to the level of them needing to raise interest rates anytime soon. I still think their bias is towards cutting. But because of what we saw this month, they're most likely going to stay on pause. And so I think what we'll have to do is see the next couple inflation reports. The next most likely time that they could lower interest rates would be in September. And if inflation comes back down and this month turns out to be just an anomaly in terms of a slight bump in the road, then they could begin cutting interest rates as early as September. But if we continue to see this mixed data where inflation is either staying steady or bouncing back a little bit, I think the Fed is likely to stay on hold for an even longer period of time. So if the Fed is going to be cutting interest rates, it's definitely going to be back end loaded. And, as we head into the second half, at this point, I would say back end loaded would be fourth quarter more likely than third quarter. But it really depends on how the data is going to come out. The inflation data so far has not really shown any of the impacts of the tariffs. But as we were just discussing, a lot of the tariff numbers and implementation have been postponed. What was announced in April really was postponed until this podcast really in the last week. And then if things start going into effect on August 1st, as the president has mentioned, that's the final drop dead date with no extensions, then we're much more likely in Q3 and potentially Q4 to start seeing whether or not those tariff rates do have a feed through to inflation. And that should really dictate what the Federal Reserve does next.
Chris Zaccarelli are independent entities and not related or endorsed by Barnes Capital Group or LPL Financial. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risk, including the potential loss of principal. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that the strategies promoted will be successful. Dollar cost averaging involves continuous investment into securities regardless of fluctuation in price levels of such securities. An investor should consider their ability to consider purchasing through fluctuating price levels. Such a plan does not ensure profit and does not protect against loss in declining markets. Asset allocation does not ensure a profit or protect against loss. This material contains only general descriptions regarding insurance needs and products. This content is not a solicitation to buy, sell, or replace any existing policy. Please speak to a financial professional regarding your specific insurance needs prior to taking any action. All performance reference is historical and no guarantee of future result. The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individuals. To determine which investments may be appropriate for you, consult your attorney, consultant, financial advisor, or tax advisor prior to investing. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Independent Advisor Alliance, a registered investment advisor. IAA and Barnes Capital Group are separate entities from LPL Financial.